Today, I'm going to talk to you about why I'm using two separate brokerage accounts and what my strategy is. So I've already talked about my strategy for each brokerage account, and in this video, I wanted to go into the benefits of each and why I use both and not just one. And separate one into both of my strategies, right? So one of my strategies, which is M1 Finance, again, is to buy and hold forever, basically. I just want to keep getting dividends. I want to keep getting growth, and I just want to buy and hold. And I don't ever really plan on selling anything out of this portfolio. My Robinhood portfolio is actually meant to be, bought and sold when I feel like it, and I just feel like I make decent returns when I do this as well. Um, they're just different strategies. I like to do technical analysis on the stock charts, and I also like to just buy and hold and have that asset, which is my M1 Finance. Um, Again, I do keep at least half in these ETFs that just, keep it stable, keep this chart looking, not as jagged. If I were to put in, 8 shares of AT&T and then sell them all, this chart would not look pretty. If I went all in on AT&T and it went down, the chart would go straight down just like the stock, and that's not what I'm hoping for. I want a stable. I still want my money to be stable, but I like to mess around with it. I just find it fun, so that's what I do. So I will go ahead and break down M1 Finance, and then what I like about it, what I don't like about it, basically the advantages and disadvantages of it, and then my Robinhood account, and I'll tell you the disadvantages and advantages of that. Um, so to start with, M1 Finance does auto invest when I get dividends. It's $10 is what I said at. If I have $10 in the account, it automatically puts it into these pies, right? That's what they're called. And it'll automatically put, it needs a little bit more in real estate. It won't put any in bonds. It needs a little bit more in funds. It'll automatically do that for me. I don't have to do anything. And if I don't put any money in it and I just get dividends, it'll do it for me automatically without even transferring any money into it, right? That's one of the key benefits of this. This is why I want it to be one of those just buy and hold, and I never have to worry about it again. Another key benefit is fractional shares, and I can actually use the example that I used last video, which was Avgo, right? Broadcom, right here. I don't even have a third of a share, right? I have 1/6 of a share. Avgo is going for about $300 right now. I own 58, $58, so I have 0.186 of a share, right? And the average share price that I bought it at was $290. So right now it's 312. So that goes to show you that it just helps to diversify, especially a smaller portfolio. I can put, money and allocate sections to stocks, and I don't have to buy a whole share, right? If I bought a whole share of Avgo, it would be a much higher percentage than just 4%. So that's another key advantages for smaller accounts, particularly. It just makes it easier to diversify quickly, right? I can have the diversification of, a multi-$100,000 portfolio with just $3,000. So that's another key advantage and why I like M1 Finance and why Robinhood, doesn't have these features. So it's why I have two accounts, right? There's other ones like Webull and stuff. Those I find very similar to Robinhood, and I don't need to fix what's not broken, right? So I like M1 Finance and Robinhood. They're the two. They are distinctly different. The last key advantage that I want to talk about with M1 Finance is the ability to add retirement accounts. I will definitely be doing that in the future. When I get, when I graduate from this graduate program and stuff, I will be definitely adding a retirement account. But this is where I'm at. So I like M1 Finance as a buy and hold, um, hands-off method. I do pick the stocks that are in here, the funds that are in here, but I don't have to do anything beyond that. And I like to pick my own, and that's what I've done. So that's why I really like M1 Finance. So the The disadvantages is that it has these trading windows, right? So it only trades at 9 a.m. on Monday. You can't trade at 9:30. You can't trade at 10. It trades at 9 a.m. on trading days. You can't. You can get M1 Plus to get at 2 p.m. But I don't really see an advantage in that. Um, but that's a disadvantage, is that you don't trade whenever you can't buy a stock in the middle of the day. You can't day trade whatsoever. You can't really. It takes a long time to trade since you're doing fractional shares, so it takes 30 minutes or so to trade. That's another disadvantage. So that's the main disadvantage that M1 has, is these trading windows. It doesn't, execute the trade when you do it. Another key fact is that it's hard to buy and sell stocks doing this way. Like, it's hard to sell stocks um, and try and, like, return on your investment. It's hard to get out of a stock quickly. If you need to, for some reason, if you're trying to swing trade, it's really not feasible on M1 Finance. M1 Finance is basically meant to buy and hold for a long time, and I use it as a dividend, tool, and that's what I like about it. So the dividends just this week, I got $2. If we go to my activity, and we can filter just by dividends. All right. So yeah, I've had great past 2 weeks in dividends. This is just this week. All of these have come in this week. Yeah, they're 30 cents, whatever, but this $3 up here, all from dividends. And I'm seeing that already with just $2,000 in here. And I am just excited for the future. So that's my M1 Finance account, and those are the advantages and disadvantages of it. It's really great for holding long term and not messing around with it too much. But it does have disadvantages. You can't get out of a stock quickly or anything like that. So now I'll move on to Robinhood and why I still have a Robinhood account. If I'm so in love with M1 Finance, why do I even have a Robinhood account? Well, that's because Robinhood usually executes my trades, within a couple seconds, which is perfect. Um, I can pick the individual shares of stocks. There's no fractional shares or anything. So, like, I can go all in on a stock if I want to. It just offers a lot more flexibility on when you buy and sell stocks, right? You can buy and sell at any time of the day. Um, as long as it's a trading day. If you have Robinhood Gold, you can trade in after market hours. You can trade cryptocurrency on here. It just offers a lot more flexibility than M1 Finance, okay? So that's why I still use it, right? Because I still like to be actively involved in my investments as well. I know people will tell you not to do that, blah, 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 but it's fun, and I like to do it. And that's just, I enjoy doing it, so I'm going to do it. That's all you really, need to say about that. So the disadvantage is that it just, to me, it feels, unorganized. I might just be OCD, or something, but, like, it's really impossible to, sector these out and show what's in real estate and what's in, healthcare, and, like, how these are all nicely sectioned out. I know where all my stocks are in each sector. You can't do that in Robinhood. So to me, it kind of just feels unorganized. I wish that you would be able to, like, put these in folders or something, and you could look at the gain on the folder itself. But I've never seen a way of doing that. Another one is that it doesn't have fractional shares. It also doesn't have drip investing, which is when stock pays you dividends. You can't reinvest. You have to manually reinvest the dividends that you receive. So it's more hands-on, right? But that's what I was looking for. So that's why I like having Robinhood for my strategy of my active role, right? And then I like M1 Finance as, I consider just a bank account. I just kind of deposit money into it, and it just does its thing. So that's my viewpoints on my portfolios, and this is how they performed this week. Pretty good gain, $45. I did put another $30 in, and that's not accounted for here. So this is just from portfolio profits, right? It's a money weighted return. So it's only accounting for the gains that the portfolio has actually received. A lot of this is from Um, it's actually from my dividends that I've received. I've received quite a few dividends, and I've got quite a few more to go. Uh-oh. Well, yeah, here we go. I've got quite a few dividends that I received. You know, $20 here, 40 cents, $4 from AbbVie. AbbVie, I love AbbVie. But yeah, so these are uh, my portfolios. These are my, investments in each. I'll link everything down in the description. If you enjoyed, please give it a like or comment. Any questions, I'll try to answer them to the best of my ability. I'll go ahead and show you the week view on this one. So, yep, up $20, $2 from dividends. So it's $2 from cash flow right there. Everything did well. Utilities are down slightly. That's mainly, I think, from CenterPoint. I didn't jump out soon enough, and they had a bad earnings call, so that's where I'm at. So I hope you guys learned something, and I'll see you in the next video.